all real estate is really local. So you might be listening to somebody who has a lot of experience and great motivations, but they're in a completely different market. And what they have to say might not exactly apply to the market you're considering investing in.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, our sponsor for the show today is Pine Financial Group, the leader in hard money lending in Colorado and Minnesota. And they were recently approved to offer their investment publicly. This investment offer is only for investors in Colorado and Minnesota and is only made through their investment prospectus. Get your copy today. Simply visit www.pineinvestments.com and click to get started. Look, there's a reason why some of the wealthiest people in history invest in loans backed by real estate. Learn more about the risks and returns at www.pineinvestments.com.
Welcome back to another edition of Hump Day Hustle, the show where we focus on business and real estate as our core pillars of wealth creation. My name is John Stiles with Bridge Realty, and I'm excited for another great episode. Today, we're going to be talking about a question that I think is really important. Who should we be listening to? And with that, here is our host, Todd Dexheimer. Todd, how you doing today?
I am doing fantastic, John. How are you?
Doing great. Recovering from all the 4th of July festivities, kind of a long holiday week. So it was good stuff. How about yourself?
Yes, I mean, same thing. I checked out basically Wednesday afternoon. I completely checked out and we went to kind of northern, not super far north, but northern Wisconsin, where we don't really get good service. So I put my phone away and I didn't check it and I didn't have my computer out, nothing. And so now that I'm back, I'm playing catch up. I had a lot of emails on Friday, especially, saw me even Saturday and Sunday, and I didn't check it at all. So today has been mostly like an email day, and I still got more to go. But you know, it's nice to just kind of check out sometimes and be able to spend time with the family and really focus on, you know, that type of stuff versus always focusing on the business. So it was kind of a mini little hiatus that was good to see that I was able to do it, because we're going to be going to Europe at the end of the summer. And my goal is to check out for the entire 2 weeks that I'm gone, and not do any work whatsoever. And that's going to be challenging. We'll see how it goes, but I'm hoping I can set it up properly prior to leaving to where I can completely check out. My goal is the week prior to essentially have checked out already. And kind of be maybe not, I shouldn't call it micromanaging, but maybe slightly managing to make sure things are right. And then when I'm gone, not have anything to worry about because I already know that I prepared for it properly. So we'll see how that goes. I'm hoping I can do it, but I think it's important sometimes to just completely reset your mind and your energy.
Yeah, for sure. I mean, that's why that's one of the things that drives us, right? Is the ability to really spend quality time with our families and have something to live for more than just, more than just business or money or whatever it is.
Yep. Yep. We can always be busy. We can always drive ourselves really hard if we want to. And I typically do on a daily basis. But sometimes it is good to just reset and focus on truly what's important, and kind of just take a step back. And I think it allows you to be a better business owner as well, better business owner, better husband, better father, or wife and whatever. But I think being able to step away from your business overall allows you to really think about how you're operating your business. And so I've been trying to be a little more aware as I go, and I'm hoping, in a couple weeks prior to leaving, I can have everything set up to be, basically on automatic feed, and where I don't have to really worry about that couple weeks that I'm gone. And that by being able to do that, you have to set your business up for long-term success, so it really
Sounds like
helps you think about it.
sounds like we could do an episode on this topic, huh?
Yeah, 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 definitely.
Well,
Let's get to our topic today, which is not what I'm talking about, uh,
right.
but it's about really, who do we listen to? There's a lot of people out there talking. I've got a podcast. I've got my own opinions. John, you've got your own opinions. We've all got our own opinions. But who do we listen to? You've got a lot of successful people out there talking, a lot of not successful people out there talking, who maybe on the surface show you that they're successful or pretend like they're successful, who have some opinions. And some might be good opinions, by the way. I'm not saying the people that uh, don't have a lot of credibility, but pretend like they have credibility aren't. Sometimes they've got good opinions. Sometimes they've got real good research, and you might want to listen to them. But who do we listen to? Um, I think is really important. And how do we listen to them? I think that's the better, or the more important thing as well. So, John, what's your opinion on that? How do you navigate through all of the flow that's out there, all of the opinions that are out there on Facebook, on Bigger Pockets and LinkedIn and whatever, the news feeds and all that kind of stuff? How do you navigate that?
Yeah, well, I think we might need to narrow down the focus a little bit. Are we talking more about like what's going to happen in the economy, or
Yeah,
are
I would say, for me and for probably the base of my listeners, we're talking about the economy, and we're talking about multifamily in general, or real estate. What's going to happen with the real estate industry? Where is it going? Who do we listen to, when we're thinking about economy and whether you buy? And I think right now the hot topics, the burning question for most people is, what's happening with the economy? When's the recession coming? And should I buy or should I not buy right now? Because most of us are, I think, smart enough to understand that a recession eventually will happen, and it's likely sooner rather than later. However, we can't predict that. But who should I listen to? Do I listen to somebody that says we should be selling everything, or do I listen to somebody who says we should be buying everything?
okay? Well, yeah, I think one piece of advice, talking about giving opinions or giving thoughts here, is don't fall for the clickbait, because the news media and Facebook, it just thrives on clickbait. Like, what is the most outrageous thing we can say? Oh, the economy's gonna, it's gonna tank, or this is the year it's gonna happen, or if you just rely on those types of headlines, and maybe you just read the headline, and that's all you take away from the whole entire article, or the whole entire blog post, whatever it might be, that's where I think you're going to run into some trouble, because really people use those headlines just to get clicks. And so I would say to shy away from that as your only source.
Yeah, a good point there, because I see a lot of people predicting the economy is going to crash, and that's always something that people want to click on. I mean, Robert Kiyosaki built his business essentially around that. When you look at his education platform and how it's centered, it is essentially the economy is going to crash, and you need to prepare yourself and educate yourself so that you're ready when it does, to be able to take action and to be able to, thrive. And which is not necessarily bad advice, but he has built his business, he's built his success and his following based on that negativity, and that the economy is going to crash. And whether you like Kiyosaki or don't like him, you obviously know, most people that are listening know the name. Most people have read Rich Dad Poor Dad and potentially many of his other books. But just listen to him for a little bit, and he's very negative. He's always predicting a crash. He was predicting a crash back in 2002, predicting a crash in 2005, predicting a crash in 2010, predicting a crash in 2015. He's predicting a crash today. He's always predicting a crash, but it gets a lot of people to listen, and people are, taking action because of that. And he's done a good job because he's got a big following. But
Yeah, well, that I think it points out that that idea of we have two things that motivate us: either the desire to achieve something or to gain something, or the fear of losing out, or fear of failure, whatever it might be. So you have this
yeah,
fear motivation, or I can't think of what the term
yeah,
they are.
we're very driven on fear. A lot of us are very driven on fear. We're driven on fear and opportunity, and Kiyosaki does a very good job at really hitting on fear. And he does hit on the other kind of nerves that we have too, but he drives a lot on that fear base if you listen to his message. And I'm not necessarily saying what he's doing is wrong. I'm just pointing out that's kind of how he does it. But so to get back to our topic, there's so many people out there. I hear it all the time, that have these opinions on whether we should be buying or selling, or when the recession is going to happen. And quite frankly, I would say since probably 2015, maybe even before that, the recession has been coming, and it will be here in the next year to 2 years. And it's been very consistent. I think at least from 2015, I hear it, and I hear it all the time. And so right now, if you listen to the experts, the economy is running along smoothly, and the recession will be here in the next year to 2 years. But that message was the same back in 2018, 2017, 2016, 2015, possibly even before that. So we have to watch out kind of how we're perceiving the news.
Yeah, and I guess I'll just add that you can't rely on just one source.
Yep.
I would say, if you're really going to be making a decision about a particular property, or whether it's the right time for you to invest right now, you got to dig into some of the raw data and interpret it for yourself a little bit. I mean, and also just take the different aspects or the different experts that are out there and see what they're all saying instead of just one of them. But a lot of times those experts are interpreting the data for you, which, that's because they're the experts. They know them better than we do. But that raw data can be interpreted a lot of different ways. So you have to really understand what data is being looked at.
Yep. Hey, let's take a minute to thank our sponsor, Pine Financial Group. Look, you work hard for your money. Is your money working hard for you? Because of inflation, money sitting idle erodes your wealth. Many investors understand that real estate is a great investment, but may not want the effort or the risk that comes with owning their own property. They want to sit back and have payments, hit their bank account each and every month. Stop eroding your wealth and start building it by asking your money to work for you. You should be earning profits while you sleep, an investment backed by real estate. Pine Financial Group, the leader in hard money lending in Colorado and Minnesota, was recently approved to offer their investment publicly. This investment offer is only for investors in Colorado and Minnesota and is only made through the investment prospectus. Get your copy today. Simply visit www.pineinvestments.com and click to get started. There's a reason why some of the wealthiest people in history invest in loans backed by real estate. Learn more about the risks and returns at www.pineinvestments.com. It's www.pineinvestments.com. Hey, I'm super excited to announce the North Star Real Estate Conference that I am putting together along with a few other friends, and we are expecting to have a great crowd there. This is going to be September 20th and 21st in Minneapolis, in the Twin Cities area. And hey, it'll still be warm, and we're going to have a ton of great speakers there. We're going to have some motivational speakers. We're expecting to have speakers talking about a lot of different commercial real estate topics, multifamily and commercial real estate. So we want you there. We would love to have a great crowd there. We would love to have you there. And the cool thing with this conference is all the profits are going to benefit charity. They're going to benefit Junior Achievement specifically, who they serve underserved youth, and they bring financial education to them. They not only teach financial education, but they teach the kids how to be entrepreneurs, how to be business leaders, and how to really do fantastic things after they're out of school and moving on. So that's who we're going to be benefiting. We're going to also have a charity gala. It's going to be a fun event, and I'd love to have you attend. So again, it's called the North Star Real Estate Conference. Check it out. We've got links that we'll put on the show notes. We would love to have you there. We'd love to have you attend. Speaker lineup is coming, and that'll be announced shortly. We do have a few speakers already lined up, so you'll be able to see that. We've got Trevor McGregor will be our keynote speaker. He's a master platinum coach. So you're going to love this event. We are going to just have a ton of fun and learn a bunch, and also benefit a great organization as well. I will see you there. Check out our show notes for the links. So Nikolai Ray, some of the listeners may know his name or know who he is. He posted something on Facebook recently, and was kind of asking that question, and or kind of not even necessarily even asking the question, but just talking about the subject a little bit. And somebody said, well, who do you follow? And he listed off a name or names, and it was like a dozen or so names. And when I read those names, I thought, well, geez, those are everybody's well known on that list. But out of that list of a dozen or so people, I know at least 3 of them have totally different opinions from each other. And that was my thought is, okay, well, one guy, and by the way, I respect and like all 3 of them. One guy, his opinion, and it's been this way since I bet about 2014 or 2015, is that the economy is going to crash, and that multifamily, he's a multifamily investor, that multifamily is going to crash and burn. The real estate market is going to see a major recession equal to 2008. And he's been predicting that since 2015. And it hasn't happened yet, but he's still predicting it today. And he will probably continue to predict it into the future, whether it happens or not, and he'll be right eventually. Eventually that the real estate will go down in value. The other person, I was listening to them speak, and back in 2016, they were talking about how the economy and the real estate market is super overheated right now, and they are putting a pause on buying, and they think that we are posed for a downturn in the real estate market. However, today they're being very aggressive. very aggressive in purchasing. They're purchasing buildings for substantially higher prices than, let's just say they're purchasing buildings for prices that, allow for them to buy it in a competitive bid process, which is, high prices typically. So they're being very competitive. So I haven't heard them change their opinion necessarily, but by their actions, I would say they've changed their opinion. The other person has kind of always had the message of just buy right, be conservative with your numbers and keep on buying. The economy's great and don't stop. There's no reason to stop as long as you buy right and you fund it right and you have enough capital reserves. And so those are three very different opinions happening and by three very respected people in the industry.
Yeah, well, I think it's kind of like a debate. You have to understand both sides of it, and
Yep.
you have to understand like the middle ground. And I guess I would be in that middle ground. If you personally are in a position where you're ready to buy, then and if you're finding a property that you're able to purchase right, and we know what that means, not overpay for it, and a property that's going to be a long-term, a good investment in a good location, attract great tenants, that type of stuff, then how could it be a wrong time to buy if that's your strategy there? If you're trying to otherwise play the market and buy at the very bottom and sell at the very top, well, the thing is, we can all see when that happened in hindsight, but looking forward, it's nearly impossible to ascertain or determine it exactly. So
Yeah. And so for me, my opinion, and everybody should listen to me, by the way. My opinion is that uh, what, right now, real estate is definitely at a higher level than we've seen. And so values are definitely high and potentially even inflated. So we need to be very careful when we're buying. But if you follow the right fundamentals, which is not buying for appreciation, buying for cash flow and true cash flow, like make sure you understand the real expenses. That's a big thing that I see some people messing up on is they don't understand real expenses. They don't understand maintenance expenses. They don't understand turnover costs. You know, how often does that unit turn over? How often are these tenants moving out? So you need to understand like where your market's at, where your sub market's at, and where your demographics at. If the turnover ratio is 60% per year, and you're only putting away $200 a unit for turnover costs, well, you're probably really pretty light on that. But if your turnover ratio is 30% and you're putting away $200 is still pretty cheap, but $350 for your turnover costs, well, that's probably okay. So it really depends, and talk with your property management company on what they're seeing in the market and get some historical from both that property and other properties around it in that market with the same type of units. I see people putting really, really low repair and maintenance expenses on them. They go, well, because we're renovating the units. Well, guess what? Stuff still goes wrong. Repair and maintenance happens no matter what, whether you're renovating or not. It still happens. Tenants still move out, whether you're renovating or not, and you have turnover costs. Like things don't just magically stop because you've renovated the units. Now, can expenses go down a little bit? Sure, but it doesn't magically stop. The other thing is, what's your financing like? Are you getting good, solid financing? Is it good for long term? Um, if you're setting yourself up in a poor financial position, then when the economy does turn, can you do anything about it, or are you just stuck and you're done and you got to give the property back because you set yourself up for failure? That's a big thing. And then the last thing is, do you have cash reserves. For me, I raise a lot of extra money in order to make sure we've got a bank account that has enough money inside of it to where we can pivot if we need to. We can cover some losses if we need to. If we have, roofs go bad or major expenses that we weren't expecting, we have money to cover that. That's really important in my opinion. So it's cash flow, it's financing, and it's cash reserves. Those are three really important things. And like you said, don't just buy and expect appreciation. Don't just buy expecting the market to continue to go up. In my opinion, right now, you should be buying expecting the market to go down. If you expect that today is the peak and that tomorrow is going to be, the building's going to be worth less than it is today, that's a good position. If you can still then make the returns that you want to, that's the time to buy.
Yep, exactly. If you're planning for kind of a worst case scenario, or even a likely case scenario, since we are all thinking we're close to the top, we don't know exactly which point we're at, but we all agree prices are higher than they were before.
We don't all agree, by the way.
Well, prices are higher than they were yesterday.
That's maybe true. Most of us probably agree with the facts, but some of us don't agree that the economy is nearing. Some of us think that the real estate, and quite frankly, I do. I think that real estate values are going to continue to go up. They might see some negative, downward pressure for a slight period of time if we do hit a recession. But my opinion is the next recession isn't going to make real estate crash. It's going to put a little bit of downward pressure on it. It's going to be like a 2001, the .com, where values flatlined and went down slightly, but that was only for a short period of time. And then I think it's going to continue to go up. But that's just my opinion. I could be completely wrong. So what I want to just say is when you're looking at other people's opinions, my opinion and everybody else's, take it all in and really try to understand it, and then come up with your own conclusions, right? And make sure it works for you, for your business plan, and for your investors if you're using investors. But make sure it works and you can actually make sense of it all. If you can't make sense of what everybody's opinions are, then don't use them, right? So that's what I do. I listen to everybody. I throw out the garbage, and I take everybody else's opinion that I think has value and validity, and I form my own opinion through that. That's what I do. That's in my opinion the best way to do it, and that way we really can get a good grip of what's going on and how to best serve how to best serve my investors and my business.
Yeah, and listening to those other even competing arguments can really help you stretch your thinking and help you make sure you're not overlooking some aspect of all the data that goes into it. So
yep. The other thing is pay attention to who you're listening to, right? I mean, figure out who you're listening to. If you go, okay, great. There's a lot of people out here right now that are talking and teaching and are podcasts and all this kind of stuff, but some of them, like I said earlier, have zero credibility in my opinion. So how did they form their opinions? And again, they might not be wrong, but we have to understand, okay, where did they come from and how are they forming their opinions if they don't have that success, if they don't haven't had time in the market, and I haven't had the most longevity in the market. I've been going since 2008. I've been probably studying real estate since about 2005. So there's people that have been in it a lot longer than me, and I listen to those people and I pay attention to what they're saying. And so a lot of my opinions are formed on my experience, but a lot of my opinions are formed based on other people's experience. And I am very cautious when I hear somebody talk that I have either found out through my research or just know by, knowing them, that they have very little to no experience. I'm cautious about what their opinions are. And a lot of times just discount them or throw them off or throw them away or whatever. But sometimes I listen to them. Again, sometimes I listen to them. It depends on how they form their opinions and where they're from.
Well, and as you identify what the source is of that information, you can see, is there an ulterior motive? Are they trying to sell education? Are they trying to sell you real estate? Are they trying to, do they have some other motive that's maybe influencing their opinion about the market?
Yeah, very, very good point, John. And that's an excellent point. What are they trying to do? What are they trying to sell potentially? And take some of the things they may be saying with a grain of salt then. And if anybody's too positive or too negative, then I usually kind of just brush that off and push it aside. Because it's not, in my opinion, it's not all roses and it's not all thunderstorms. So,
yep.
Cool. Anything else on this topic, John? When we're looking at who do we listen to and how do we form these opinions?
I guess just maybe one more thing to consider is that all real estate is really local. So you might be listening to somebody who has a lot of experience and great motivations, but they're in a completely different market. And what they have to say might not exactly apply to the market you're considering investing in.
Yeah.
So that's just one last thing to consider there.
Yeah, good point. And definitely real estate is local 100%. And we want to make sure we're paying attention to the local market. And we've talked about that before. We talked about, I think just a couple episodes ago, out of state investing versus in state and researching these markets. And we've done other podcasts on researching markets. So make sure that you understand your own market that you're either living in or actually investing in, and know that it's definitely different. I mean, Minneapolis is different from Dallas, and Dallas is different from San Francisco, and San Francisco is different from New York. And so they're all different markets, and they've all got different cycles and different positives and negatives to them.
Yep.
So, cool, John. Well, that's all I got.
Sounds good. Well, we appreciate all of our listeners and viewers tuning into the show here. We'd like to hear what your opinion is on where the market's heading. So be sure to comment either on our YouTube video, or you can comment on our Facebook page. And while you're at it, we really appreciate your rating and review on iTunes.
Yeah, that'd be cool. I'd love to get a discussion going, or people to comment on our Facebook page or wherever, and let us know what you think. And who do you listen to too? If you've got an opinion on maybe some of the people that you really listen to and hear from, let us know about that as well. So, and John, we've got a conference coming up. I know we mentioned it earlier on the show, but we got a conference. So people need to sign up for that conference at nreconference.com, right? nreconference.com. They can go to that, sign up. It's going to be fantastic. We got a ton of awesome speakers. I'm going to be there, John. You're going to be there. I'd love to meet people there. And I think it'll be an amazing event. So,
yep. Sounds good.
Cool. Well, John, that's it. That's a wrap. Make every day a Saturday, man.
You too.
Hey, thanks for listening to the show. Couple things before we go. Again, go on to our Facebook page, Pillars of Wealth. We'd love to have you on there. Go on to iTunes, give us a rating and review, and subscribe to the show. Also, don't forget, reach out to me if you want any help with potentially growing your business, and reach out to John Stiles to help you buy or sell real estate. Thanks for listening. We appreciate it. Have a fantastic the rest of the day. And as I say, make every day a Saturday.